There have been huge bubbles in the stock market, real estate, cryptos, and venture capital funding over the last 3 years. This comes on the back of massive bubbles over the last 3.5 decades. The mid to late 1980s saw bubbles in Japanese stocks and real estate. The late 1990s and early 2000s saw a bubble in dotcom companies with no business models. The 2000s saw a huge real estate bubble along with a bubble in stocks. The interesting thing is that once a bubble bursts, in hindsight it seems very obvious. But if the bubble is so obvious in hindsight, let us explore why does it flourish in the first place and not burst quickly. Economic historian Charles P. Kindleberger talks about two kinds of investors in any market: insiders and outsiders. The insiders want any bubble to keep growing and seek benefits at the cost of outsiders. Let's try and understand this in the context of cryptos. The insiders were individuals running stock exchanges, the venture capitalists funding these exchanges, and influencers talking about how important it was to own cryptos as a part of an investment portfolio. Many influencers didn't tell the world at large that they had been paid to say the same. It was in the interests of these insiders that the crypto bubble kept growing bigger. The more the insiders propped up cryptos, the more outsiders, that is, retail investors, got into buying tokens. A similar dynamic was at play when companies with next to no profits and weak business models came up with their initial public offering, IPO, at massive valuations through 2021 and early 2022. The insiders, that is, company promoters, venture capitalists, investment bankers, and brokerage analysts, kept propping up these stocks, in the process creating huge demand for the IPO. The way the financial system is structured, there is much more money to be made by saying all is well and the future is bright than to become a purveyor of bad news. Further, regulators are also reluctant to call out bubbles. First, because no one really knows when a bubble is likely to burst. Second, as and when a bubble bursts, it can create trouble in the overall economy, and no regulator wants that to happen on its watch. On the flip side, not enough outsiders call out these bubbles. As Zain, Dial and Akaleen put it takes 10 times as much energy to refute bullshit as it does to produce it. Ultimately, the outsiders fall for the story sold by insiders and lose money in the process. As one of the old Latin phrase says, the world wants to be deceived, so let it be deceived. And this explains why bubbles keep coming back over and over again.